Folks, we got to talk about quitting because quitting is a big deal. And to some of you, this may come as a surprise. Some of you may be very excited about this and be very, very bullish about this. Well, folks, here's the reality. When people quit their jobs, they oftentimes go to new jobs and make more money. The problem with people quitting and going to new jobs and making more money is it leads to an increase in wage price growth, which is inflationary. It's a problem. And the second thing it does is it encourages companies to keep job openings open. So when we compare the number of job openings at 1.9 to the number of people looking for work at 1, we end up getting JPOW that says this is a bad ratio. And we get JPOW that says we don't want out of control wage price growth, even though some wage price growth for obviously the worker is a good thing. Overall in the economy, we don't want too much of that. Well, folks, we actually have some good news because these two things combined together here lead to a hawkish Fed. Some good news is first, and I'm going to reverse order here. First, we are seeing companies like Apple and Google and Facebook, Snap, Vimeo, Redfin, you name it. Companies are closing job openings and companies are freezing hiring or potentially even laying off people like Tesla's laying off folks. That is hopefully going to bring this ratio in line with what JPOW wants, which is more of a 1-to-1. As job openings get closed, we could get to more of a balanced labor market. That's really, really good. But there's a second thing that's really fascinating about why people thinking about quitting, but then maybe not actually quitting because they're worried about a recession could mean. See, that's something that's fascinating to consider is look at this chart for a moment here. This is an expectations chart. This tells us expectations 3 months ahead, and it says that consumers are growing less optimistic about the labor market, which could lead to less job switching. And see, this right here is the 3-month moving average of expectations ahead. We see we've gone negative over here. We haven't seen a negative number during the COVID pandemic. We last saw a negative number over here in 2016 coming out of the Great Recession, where we had this slower recovery, especially for lower waged individuals, slower recovery. And we've had a lot of optimism over here, but we're now negative again, the first time in about 6 years that we're negative again. And what's neat about this is that because we're negative, people might actually decide, you know what, it's time to end this quit culture. And instead of quitting to find a new job, maybe getting that higher raise, maybe that's too risky in this environment. Maybe we'll just be happy right now with the raise that we got or whatever. We'll stay because we don't want to risk being unemployed, quitting into a recession. And when that happens and people make the choice to stay, you can actually eliminate potentially a lot of that out of control wage price growth, or at least the concern of wage price growth. So I started this video off by saying that, hey, quitting and the change that we're seeing in quitting could be a good news because it could be another thing on top of break evens, on top of commodity prices coming down, and on top of inflationary prices coming, or inflationary aspects of our society coming down. The fact that we could also see people less interested in quitting and job openings getting cut. And we see that JOLTS indicator coming more into balance and less pressure on wages, less wage pressure. We have all of the pieces of the puzzle here really for good news the second half of the year in terms of inflation coming down. So in my opinion, when I said that, you know, some people might be happy about this update on quitting, I'm happy. And if anything, it makes me bullish to reiterate that this is probably buy time. This is probably time, and not financial advice, but this is probably time where, look, we've taken some big elevators to the bottom of the market here. It's been very, very painful. And yeah, we might trade sideways for a while, but I wouldn't be surprised if this is either really close or slightly behind us. Maybe this here was 268 on the QQQ with a little bit more of a stable level here at about 280. We're almost at 300 again right now. You know, I don't expect to be at 400 again anytime soon, but I'm optimistic. And the more I see these inflationary pressures come down, the more excited I get. Just remember this date, folks, July 28th. It's the date that a 50% off coupon code expires. And we're thinking about doing another mega price hike. So much demand, so take advantage of it before the price goes up. There's a 50% off coupon code linked down below. And if you bundle programs, you'll get an even better deal. And you can do that automatically on the webpage, linked down below by going to mettkevin.com/join. Most common bundle, of course, is Stocks and Psychology of Money, along with the Zero to Millionaire Real Estate Investing course, because we want to prep you to be able to buy not only stocks, but real estate. See you soon, folks. Thanks. Bye.